Did you know that this week, on June 1st, was the start of an economic experiment the US and global markets have never seen before? Why is it so? Let's kick things off with a tweet from the savage Sven Henrik. Behold, the inflation blame game. GOP, it's Biden's fault. Biden, it's Putin's fault. Yellen, I couldn't have seen this coming. Powell, I'm the world's best bureaucrat and was just reconfirmed, so it can't be my fault. Me, frickin' hell. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Every Sunday, we explore the latest global news stories affecting the crypto markets, as well as the ever-changing macroeconomic environment of the world at large. This video is brought to you by iTrustCapital, a crypto retirement account service we can use to invest in and trade crypto tax-free. And we will learn more about them in just a bit. Beware of scammers out there pretending to be me in the comments below, asking you to WhatsApp them, Telegram them, join an investment group, use their investment services, asking you to send them money, crypto, and your wallet seed phrases. All of those are scammers trying to steal your crypto. The only links to my only official social media profiles are listed in the description areas of these videos. Anything not listed below is 100% a scammer, so stay vigilant in these crazy times, crypto fam. Awesome. Let's hit Crypto This Week. In addition to aggressive 50 basis point interest rate hikes to come over the summer, on June 1st, the Federal Reserve, for the first time ever, is doubling down on its hawkish stance, starting QT, or quantitative tightening. Since the pandemic, we've been experiencing QE, quantitative easing, which is just a fancy term that means the Fed was increasing the money supply, or the money in circulation, by buying up assets from the market like treasury bonds and mortgage-backed securities. Now the Federal Reserve has started QT, quantitative tightening, which is just a fancy term that means they are selling all of those assets like treasury bonds and mortgage-backed securities back to the market in exchange for money, therefore decreasing the amount of money in circulation. So basically, Fed money printer goes into reverse. What does it mean for crypto? Pav Hundell, manager at the Australian crypto exchange, SwiftX, believes that QT could have a negative impact on markets. He told Telegraph on Wednesday that it's very possible that you might just see growth in market cap trimmed slightly. And due to how markets have handled quantitative easing versus quantitative tightening in the past, I agree with him. Here's why. When the Fed buys up all the safer assets from the market like treasury bills and floods the market with cash, it causes interest rates or the cost of money to decrease. And institutional investors have an incentive to invest the cash into riskier assets in order to take advantage of potentially higher gains. Now, when the Fed sells all those safer assets back to them, it shrinks the money supply and causes the cost of money to increase, causing institutional investors to flock to safer assets rather than investing cash into riskier assets like tech stocks and cryptocurrencies. Bearish. And even though the Fed thinks they can substantially bring inflation down to levels they deem more appropriate in a short period of time, investors may be in for a rude surprise. History shows inflation can take years to return to normal, even when the Fed hikes interest rates above 10%. So even back when the Fed instituted double-digit interest rate hikes, while we are currently at a mere 0.5%, it took several years for inflation numbers to drop back to target levels. So does this mean the Fed will keep aggressively increasing interest rates while also aggressively shrinking the money supply for a lot longer than the market is pricing in? Not necessarily. The only other time in history when quantitative tightening was instituted, the Fed quickly pulled the plug shortly thereafter due to the market's reaction. Is it possible that the Fed has been talking a talk that they really aren't prepared to walk? Based on historical data, these unprecedented times, the weird Biden meeting with Powell we discussed last week, as well as midterm elections this year, it's seeming likely. Either way, the markets are as divided as political parties right now when it comes to the pesky R word that's been thrown around. Is a recession inevitable? Will we manage to avoid one entirely? Or will we experience a different sort of recession that we haven't in the past? There are two very different kinds of recessions, and the US is likely headed for something totally different than 2008. The big thing in 2008, remember, what happened was really borderline fraud in the economy because you had all these people that were borrowing money to buy homes they really couldn't afford. The bad debt floating around the financial system in 2008 led to an implosion, but since then, there have been a number of changes to the banking system, chief of which was Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. We're a little more optimistic than doom and gloom for sure, Kelly Bouchion, a senior partner at Soundview Wealth Advisors in Savannah, Georgia, told Fortune. Corporate America has never had more cash on its balance sheets. Bank surveys show that the consumer is not overladen with consumer debt, and there's a lot of cash in people's checking accounts. So there seems to be a fair amount of spending power. I think that the doom and gloom side of this may have led the equity markets to possibly overshoot to the downside, he added. Definitely a potential silver lining. However, others think an economic hurricane is coming. Political turmoil could be next. The hurricane is right out there down the road, coming our way, said JP Morgan Chase CEO Jamie Dimon on Wednesday, adding a warning to his ominous economic forecast. We just don't know if it's a minor one or a superstorm Sandy. You better brace yourself. For the developed world, the prospect of a severe recession is deeply worrisome. In poorer countries, the growing fear and already present danger is what the World Food Program is calling a looming hunger catastrophe. When economies shrink and poverty rates increase, political systems shudder. And we're already seeing that in some countries. Interesting. So basically, at the end of the day, the only certain thing about this market is absolute uncertainty. It's anybody's guess what's going to happen throughout the rest of this year. This week, conditions for a global stock meltdown have been met, research firm says. The 5 pillars of global financial stability are faltering dangerously, according to quant research shop Gavakal IS. Currently, the conditions for a global equity crash are met, Gavakal said in a note. No prophecy here, simply the observation of risk states. The 5 pillars are world dollar liquidity, energy costs, international trade, inflation, and fear. Since higher interest rates in QTF started, world liquidity in US dollars is contracting fast. US energy costs are spiking at uncharted levels. Global trade is severely damaged. Inflation has diffused globally, and the fear index is at dangerous levels. Lovely. And corporate America is starting to batten down the hatches to prepare for the potential worst. Tesla to cut 10% of salaried staff, Musk tells employees. Winklevoss twins, Gemini cutting 10% of its staff, saying crypto winter is here. And what will likely happen during a brutal crypto winter? Well, crypto firms say thousands of digital currencies will collapse. Compare market to early dot-com days. There are more than 19,000 cryptocurrencies in existence and dozens of blockchain platforms that exist. Several cryptocurrency industry players told CNBC that thousands of digital tokens are likely to collapse, while the number of blockchains in existence will also fall over the coming years. Yep, bear markets definitely clean house, freshening up the space at large. And if you've been following our bear market series, you know bear markets are also the perfect time to take advantage of amazing opportunities to buy more for less. So if you're planning to retire from long-term crypto gains, take advantage of a crypto IRA or individual retirement account as a tax planning tool with iTrustCapital. Using their services, you can trade crypto tax-free within a tax-sheltered retirement account like a traditional IRA or Roth IRA. If you have an existing 401k or IRA, you can easily roll it over as well. I personally chose to invest my funds with iTrustCapital because they have the lowest transaction fees in the industry at 1%. Their monthly service fee is non-existent, 0, which is unheard of with retirement account services both traditionally as well as other crypto retirement service providers. And soon they are slated to become the first and only crypto retirement account provider that supports DeFi functionality, which would allow us to do cool things like accrue staking rewards, all tax-free or tax-deferred. During these slow crypto winters is a great opportunity to spend some time learning about the benefits of investing within a retirement account. So scroll down to the description area below if you'd like to check them out in order to access the correct and official site to start your crypto IRA with iTrustCapital today. Sweet. As usual, let's end things on a high note with a rapid flurry of bullish news stories from the week. Fidelity added crypto to investors' accounts just before the crypto winter. It's still betting big on crypto investing. Nice. Also, over 200K BTC now stored in Bitcoin ETFs and other institutional products. Bitcoin ETPs now have more BTC under control on behalf of clients than ever before. Also, Bitcoin lures inflation-wary Argentines despite crypto crash. In the Crypt Station Cafe in downtown Buenos Aires, Trendy young Argentines order their lattes and pastries surrounded by screens with real-time cryptocurrency price quotes and a huge neon Bitcoin logo. The bill can be paid in digital money too. Another country is making moves as well. Bermuda doubles down on crypto despite recent market turmoil. The island's regulators aim to combine their international business expertise and a trained local workforce to become a digital assets hub. We are aware of the recent devaluation in the price of cryptocurrencies and remain confident that it does not threaten the island's ability to become a crypto hub, said Jason Hayward, Bermuda's Minister of Economy and Labor. This industry downturn is likely to advance our goal and positively impact our long-term growth and role in this sector. Building in a bear market. Gotta love it. And there are others. Binance raises $500 million fund for crypto investments. Investment capital comes despite big pullback in cryptocurrency prices. Cool. Others are taking advantage of the crypto winter sentiment too. Top crypto firms go on the hunt for acquisition targets as market crashes. Two top cryptocurrency companies, Ripple and FTX, told CNBC that they're on the lookout for acquisitions as the industry hopes to drive growth through buying other firms. Brett Harrison, president of cryptocurrency exchange FTX.us, said it will look for companies which will help them acquire more users or regulatory licenses. And finally, we've got one of the most risk-averse industries noticing the trend. Goldman Sachs Bitcoin survey shows insurers beginning to warm to crypto investing. The survey of 328 chief investment officers and chief financial officers, representing nearly half the $26 trillion global insurance industry, indicated that 6% of respondents were invested in crypto or considering to do so. While the vast majority of insurance companies responded that they weren't invested in cryptocurrencies and weren't considering doing so, the 6%, or roughly 20 CIOs who did respond affirmatively, is surprising given the recent carnage in cryptocurrency markets. Cryptocurrencies came in fifth behind private equity, commodities, and emerging market equities, while sitting just above middle market corporate loans, traditionally consisting of loans from banks, finance companies, and debt funds. Notably, just last week, JP Morgan replaced real estate with crypto among its preferred alternative assets. Awesome. Well, that was Crypto This Week with me, Crypto Casey. If you enjoyed the episode, please make sure to like the video, subscribe to the channel, and click the bell notification to stay up to date on all of the latest videos. So do you think a recession is here, is coming, or are we just going to avoid one altogether? Do you think the Fed will adopt QT and increase rates longer than they have in the past? Or do you think they'll flip-flop back to more loose monetary policies? Let me know in the comments below. Be safe out there.